Hello and welcome to Business Standard's Afternoon News Update. Here are the top stories. India duels with forex market to keep rupee off record low. Goldman Sachs downgrades Indian stocks to underweight. And China HSBC PMI dips to 11-month low in July as demand sags. Now the news in detail. The RBI intervened in the foreign exchange market today to stop the rupee slide toward a record low as its defense of the currency, built around draining cash from money markets, came under rising pressure. With the RBI struggling to hold the line, investors are skeptical whether the government will take swift, credible action to reduce a gaping current account deficit despite Finance Minister P. Chidambaram's assurances. The rupee has lost 11.4% since the start of May, and by mid-morning it was quoted at 60.54 to the US dollar, as RBI dollar selling brought it off a session low of 60.8325 and forestalled a move back toward a July 8th record low of 61.21. Investors worry Prime Minister Manmohan Singh's weak minority coalition will be prevented from taking bold action as it faces political gridlock ahead of general elections due next year. Goldman Sachs downgraded its rating on Indian stocks to underweight on concerns about delayed growth recovery and rising vulnerabilities for the economy. It said that the external funding environment has also become challenging, causing the RBI to tighten liquidity. Goldman Sachs also expects corporate earnings to grow at 5% for the current fiscal and 11% for the next year, below consensus estimates. A private survey shows that China's factory activity shrank for a third straight month in July to its lowest level in nearly a year as new orders fell. This signals the persistent pressure on the economy has extended into the third quarter. The HSBC Purchasing Managers Index, compiled by Market Economics Research, fell to 47.7 in July from June's 48.2, the weakest reading since August 2012. While keeping the door shut for big stimulus, the government has unveiled a series of policies to boost spending in social housing, urban infrastructure, high-speed rail and energy-saving industries, while offering tax breaks for small firms. A sub-index measuring employment contracted for a fourth month to be at its weakest since March 2009, according to the survey. The Politburo, China's top decision-making body, has pledged stable economic growth in the second half of this year while pressing ahead with reforms and restructuring. That's all we have for now. Keep watching this space for more news.